today I will be speaking about some of the key tax and certain regulatory expectations on the financial services sector for Budget 24. As you know, financial services sector plays a pivotal role in the development of any economy, and India is no different. First of all, I think the capital gains tax regime today has become very complicated with different tax rates, holding period, surcharges, etc. And a lot of our foreign clients do find it quite cumbersome to comply with the complex rules. Any simplification here would be quite welcome because it will help to unleash the potential of getting more foreign investment both in the private equity space and in the public market space. So that's number one. Second is, I think, to boost private equity or foreign investment in general in the startup sector and in the infra sector. Few changes can be made. One is to extend the sunset clause or sunset date of 2024 for tax exemption on dividend interest capital gains, which is available today for sovereign wealth funds and pension funds. That should be extended by a few more years to say 2030 or so. More importantly, this exemption should be extended to private equity funds because a lot of PE money will get a boost for channeling into infra investments once the exemption is given. Similarly, the government has an ambitious target on net zero emission by 2070, and 50% of energy requirements would be met from renewable by 2030. From a tax perspective, tax incentives should be given for example, for green bonds by way of discounted or lower on zero tax rate on interest, zero tax rates on capital gains. I think this will help to channel foreign money and domestic money into green bonds and indirectly into the renewable energy and related sectors. One or two things which can be done from the core, apart from the core financial services, is to extend the 15% tax holiday or 15% tax rate, which is today available for new manufacturing companies. That should be extended to the services sector, particularly fintech, startups, and the entire ecosystem, which can get a big boost in the financial services sector, where a lot of the players in the initial period do struggle, in fact, to make significant profitability and achieve that particular commercial success. One more issue is on the equalization levy, which banks and certain other institutions struggle, both from a compliance point of view and the law point of view. And the US and India had agreed in 21 to have a transition phase where equalization levy would be removed from 24 or after Pillar 1 implementation, which was earlier. I hope some announcement is made around that to remove the equalization levy, as was discussed with the US. No discussion on financial services is complete without talking about the gift city. And the gift city today is a great framework, both from a tax and regulatory perspective, and pretty much on par with global. But there are still a few things which can be done. For example, the 10-year tax holiday for gift city units. I don't think that is sufficient for industries which have a long gestation period or capital intensive industries, for example, universities, insurance companies, banks. I think that 10-year period needs to be extended for a few more years. Similarly, to attract workforce to come into the gift city, particularly people sitting in Bangalore, Hyderabad, and other locations who may otherwise want to come back to their hometown, they can be incentivized by reducing the personal tax rates of giving higher standard deduction for employees working in the gift city. And one more way to simplify would be to either eliminate or substantially ease the GAR provisions and the transfer pricing provisions for gift city units. And that, I think, in some sense, will make gift city like an offshore jurisdiction truly from a tax perspective as well. A couple of things on regulations. One is the whole issue around whether an investment by a family office is ODI, which qualifies for 4 times of the net worth, or OPI, which qualifies for 50% net worth. I think that should be clarified soon because we see a lot of pent up demand from the family offices sector for particularly for investment abroad. And I can understand that the government will want to balance out so that there's no significant flight of capital here. The second is from an inbound point of view, there is a pent up demand from the NRI committee, NRI community, I'm sorry, both for investment in the stock market directly as well as for investment in mutual funds. And an intention to allow 100% NRI investment in GIFT City funds, I think should be brought into statute sooner than later.